Following a nearly 400-point rally from a historical confluence zone near 2026 lows, gold is showing growing pullback risks as momentum slows and reaches overbought territory. The upcoming US CPI report and persistent geopolitical risks now stand as key catalysts for the next major move. Hello everyone, this is Razan Hilal, market analyst with Forex.com, live from Dubai. Today is August 10, 2026. From a daily time frame perspective, gold chart is still trading within a strong bullish territory after breaking beyond the bounds of the declining resistance that guided price action between March and August 2026, and also following the strong bullish breakout beyond the bounds of the extended consolidation that guided price action between June and August 2026, and most importantly, following the strong rebound from a historical confluence zone that was a previous resistance for price action between 2016, 20 and 2025 and turned into a strong support in 2026. So we're dealing with a nearly 10-year trend line, and also aligns with 27.2% retracement of the all-time advance between the lows of the 1920 and 2026. And it also happens to align with the close of a 6-month shooting star pattern, which both presents risks for a potential short-term rebound and a long-term drawdown should price action turn back below key levels that we will discuss in a few, and also following a potential breakdown back below the yearly lows, back below 3,930. Now, dropping back to the daily time frame, price action is beginning to show signs of potential slowdown as it aligns with the previous respected resistance and support on the chart between May and June 2026, and as momentum also aligns with, and as the RSI also aligns with overbought levels last seen in January 2026 when gold recorded its all-time record near the 5,600 mark. Now, the current price action near the 4,370 mark also aligns with the 50% retracement of the decline between May and June 2026, where sustainable hold above the 50% or above the 4,370 is likely to extend the next target towards the golden 618 near the 4,460 to the 4,470, which was also a major respected support zone briefly between May and June 2026 for either another major pullback risk on the horizon, as we have overbought momentum risks and major catalysts as well, in line with persistent geopolitical risk uncertainty and the upcoming US CPI report. If not, a sustainable hold above these levels would likely extend that bullish forecast toward the 4,600 and 4,770 for the potential major test for either another major pullback risk in line with extended volatility risks on the horizon, or opening the path for long-term forecasts once again for gold back towards the 5,000 and the records and new record highs once again. Now, on the downside, should we have a drawdown for price action back below the 4,300 zone, we can be expecting a potential short-term support near 4,200 and major support that is aligning with the upper bound of the extended consolidation between June and August 2026. That is near the 4,160 to the 4,140. That can either present price action with another major rebound opportunity. Should we have a breakdown below this level, we can increase confidence for the bear scenario once again, at least to retest the yearly lows near 3,900, following the breakdown below 4,050, near 2,970 to the 3,930, where we'd be aligning with that 10-year uptrend once again. We can either have potential short-term pullback risks. However, should price action drop back towards that level, we can be expecting another potential leg lower for 2026, where a breakdown below 3,930 would likely target the October 2025 low near 3,880. Before opening the path towards the next Fibonacci retracement level on the horizon near the 38.2%, and that's near the 3,400 zone. From a daily time frame perspective, we can see that that zone aligns with an over 5-month resistance that capped price action across 2025, and potential short-term support levels before reaching that major zone that may open the path for long-term dip buying opportunities on the gold chart once again are near the 3,700, 3,600 to 3,570, and eventually the 3,460 to the 3,400 zone, where we currently have a major market consensus for a potential reversal on the horizon for the gold chart once again. In the meantime, the overall outlook still remains tilted to the upside, especially as Fed rate hike expectations drop back below 50% for the month of September. However, should US CPI reports surprise to the upside and these expectations tilt back to the upside in terms of Fed rate hike expectations, in line with the overbought risks that we're seeing on the daily time frame for the gold chart, and from a weekly time frame perspective, also aligns with the 50 neutral mark from below, which can also be perceived as a potential risk or resistance on the horizon, we can have another potential major pullback risk for gold on the horizon, or another extended period of volatility risks until forecasts tilt back to the upside in terms of risk on sentiment.